Hi everyone, Bowen from Enhanced Asset Management here, just back to provide a quick update today on your direct share position in Life360. So we've obviously spoken about Life360 a fair bit over the past few months, and we thought now was a good time to come and give you the full rundown on why we like the company. So Life360 is a location sharing app, which was actually founded back in 2008 during Hurricane Katrina, and was used to provide family and friends that sort of reassurance on where you are and to make sure everyone was okay. Now, obviously, the app has evolved a lot over the past 15 years and is now in a position where they have well over 60 million monthly active users worldwide, and a full range of features which obviously include the location sharing, which is where the app started and what it's based on, but they've moved into new verticals such as crash detection and driving history and that sort of thing to make sure that families are safe. We obviously have spoken about in our last update on the advertising revenue and where we see that going for the company. So we just thought we'd reiterate that, and that's kind of the main thesis for us on Life360 is that to leverage their massive user base that a majority aren't actually paying for the service, and the advertising revenue is where a lot of that growth is going to come from. So in terms of the valuation, management have laid out a target of $1 billion of revenue at a 25% EBITDA margin over the next sort of 5 to 7 years, which obviously the advertising revenue will play a pretty significant role in. So I've just got up on screen here just sort of our base case and sort of a more bullish case on the advertising revenue and how we see this playing out in terms of our valuation. So for our base case at the moment, we currently value in around about $200 million of advertising revenue in FY28. And we see that the full revenue being just below the management target of $1 billion in 5 years' time, just to be relatively conservative. And at the moment, we value 360 on a valuation of a bit over $16.30 per share. And so there's still a little bit of upside in the share price to where we are now. In terms of our bullish valuation on where the company really could get to if these targets are hit and the advertising revenue really kicks off, we see a valuation of comfortably over $20. So this is one that we're really going to be following very closely, and as the advertising revenue comes through the financials and the margins increase, we're really confident that this business can provide some pretty significant capital return over time. Finally, 360 have just recently listed on the NASDAQ over in the US. So you can now purchase shares on the NASDAQ in 360 under the ticker code LIFE. And this doesn't affect the ASX version at all, but it has created a little bit of volatility in the ASX share price for 360. Now, we've used this volatility as the perfect opportunity to increase our weighting to 360, which we've communicated with you, we've been looking to do. Been looking for a little bit of share price weakness to take that opportunity, and that's finally eventuated. So as you can see here, we saw a little bit of a pullback in the share price as the company listed in the US, and we used that opportunity to increase our weighting up to where we want to be now. And obviously, we've seen a pretty good run in the share price back to where we were prior to the US listing. And, we're making some pretty good returns on 360 for your portfolios. As always, this is general information only. If you do require any further financial advice, please reach out to your licensed advisor. Thanks, guys, and we'll be in touch shortly. Cheers.